norms are the standards which have been laid down for the banking system. So previously there were Basel I norms, Basel II norms, and the latest ones are Basel III norms. Now this Basel III is an iterative step for enhancing the regulatory framework, and it is believed that since India works on the Basel III norms, the banks are more stable, and this is actually a consortium of 28 countries who came together to devise this Basel III norms, and this was in response to the crisis, the financial crisis that happened in 2008 and throughout the recession. Now this is an international regulatory accord which has included a series of steps taken in order to mitigate the risk for the banking sector. Now this, as I said, aims to reduce the risk, promote transparency, deal with financial stress, and there have been the real application which has been pushed to 2023 January. However, it was originally brought in 2015. So the idea is some of the important goals that we need to understand. So the first is to improve the regulation, supervision and risk management. Now banks have tier 1 capital and tier 2 capital. Tier 1 is the core capital. Tier 2 is the supplementary capital. Now the core capital includes what? It includes the core capital, the equity and the disclosed reserves. The tier 2, which is the supplementary, refers to undisclosed reserves that we have with the bank. Now tier 1 is usually more liquid and considered as more secure because it is the core, it's not the supplementary. In the previous Basel norms, tier 1 ratio was 4%. The total percent was 8%. That is the total capital ratio that has to be maintained by the bank was previously also 8%. Now also it is 8%. But previously tier 1 had a contribution of 4%. Now this has been increased to 6%. So 8% of the risk weighted assets. That's extremely important. Okay. So this has increased. The second important is that banks are asked to maintain an additional reserve which is known as counter-cyclical capital buffer. Okay, this counter-cyclical capital buffer is essentially rainy day fund, we could say. So it can range somewhere from 0 to 2.5% based on the risk-weighted assets of the bank, and this could be imposed on the banks during an economic expansion period, right? The next is, as I said, the capital buffer named as the counter-cyclic capital buffer, and this is extremely important. New leverage and liquidity requirements. So under new leverage and liquidity requirements, what is important? We are to safeguard under excessive and risky lendings. So banks should make it clear that they are not doing a risky lending. So high quality liquid assets, which are known as HQLA, would be maintained, and this would have so much funds that they would be able to store for a period of 30 calendar days. So in case the bank is having problem, this high quality liquid asset should be able to meet any requirement for next 30 days to come. The next is net stable funding, NSF. The net stable funding is available stable funding which is essential capital and liabilities with a time horizon of more than 1 year. So the time horizon is more than 1 year, and it is essential capital and liability. Okay, so it is essential capital and liabilities with a time horizon of around 1 year. So these 2 points taken under the new leverage and liquidity requirements, then the capital buffer and increasing the proportion of tier 1 capital by 2%, and this makes the total capital ratio more liquid. Okay, since tier 1 capital is more liquid and more secure. I already explained what is tier 1 and tier 2. So tier 1 is disclosed, tier 2 is undisclosed reserves, right? So those are some of the important goals that we have discussed under the Basel III, the norms that we have already laid down, and definitely Basel III is a step forward to the existing or the previous Basel I and II norms. So Basel III norms extremely important, the goals under it, the counter-cyclic capital buffer, extremely important, the high quality liquid assets and the net stable funding. So those are the concepts which pertain or relate to the goals of the Basel III norms. So extremely important topic in light of the recent economic failures, bank failures in United States which we are seeing, and definitely the previous class that we have taken on bank failures, the reasons for the major bank failures in recent in United States are extremely important. Do cover them properly.